Assets are basically things that are of value to you. If you're investing in land, how long do you need to hold on to this land for it to actually bring out the money that it's supposed to bring in? So basically, what stocks are, please. Hello, beautiful people, and welcome to my YouTube channel, where we talk about everything personal development, from your academics to your finances, to your relationship, guys, your budget. So if you like that and many more juicy content, please hit the subscribe button below and become part of the family. And also just to give me advice because those don't come right in the house. So without further ado, let's get right into this video. Basically, today I'm going to be telling you about investments. So investments with this choice can possibly make. So basically, what are the investments is a question that you and I are both wondering. Investments are basically allocation of money or resources to assets so that we can gain profit at the end of the day or after some time. How investments work is that you don't get your money immediately. Your money comes in after a period of time, so we have like accumulated profit, for instance. Accumulated profit. So basically that's what investments are. You're probably wondering what are assets, right? So assets basically are things that are of value to you, and that's basically layman's definition of assets. That's my definition of assets. Assets are basically things that are of value to you, things that bring in value to you, things that don't subtract value to you. That is what we call an asset. So there are different kinds of assets. We have fixed assets, recurring assets, we have fictitious assets. So basically fixed assets are mostly long-term assets, things like land, things like machinery, that could like go for long periods of time, basically like fixed assets. And we have current assets, things that are assets right now, for instance, stocks, bonds, and other things. And then we have fictitious assets, things like the reputation that you built, right? That is a fictitious assets. I'm not going to stretch so much on assets. If you want to know more about assets, please watch the playlist about assets. But moving on, basically investments are putting money into assets so that you gain a profit long term. So investments are typically made through investing in assets that can either accumulate value over time or bring in income over time. So basically we have different types of assets. So different types of assets that I can give are stocks. So basically what stocks are, let me explain it in layman's language, right? So if you're investing in a stock, what you're investing in basically is shares. So what are shares? So when a company is formed and the visionaries have a vision of what they want the company to be, but then they don't have enough resources to establish or reach their goal. So what they'll do is they'll divide the company into shares. So what shares are is a piece of ownership of the company, right? They basically just divide the company. So if you invest in shares, for instance, the company is divided like 1,000 shares, right? And you get 100 shares. Basically you own like 10% of the company. So meaning you have 10% of investing decisions, 10% of voting rights, 10% of dividends. So when the money comes in, right, when the company makes its profits and stuff like that, 10% of the profits is yours. A share is basically a piece of a company, let me say. So when you invest in stocks, you're investing in a piece of a company. You can make money through different ways in stocks. So in stocks, basically, you can choose to get a stock right now that is cheap and then sell it at a price that is higher, or you can get a stock right now, hold on to it, and when the company grows and it starts making profits, you start benefiting in profits in dividends. So basically, there are different ways you can earn money through stocks, and that's why we have the stock market and other stuff. I'm going to talk more about this in the video that I'm going to leave in the investment playlist. I'll try to leave it up in the description so that you guys can go and watch all about stocks. Moving on from stocks, so another type of asset that we have is a bond, right? So basically bonds are debt securities that are allocated by either the government or corporations or companies, which basically is a platform to people to lend money to these corporations or to the government in forms of bonds. So basically when you are getting a bond or a stock, you're basically lending money to the government or to a corporation, to a company. So how does bond work is through a period of time that you lend them the money, the government or the corporation will pay you interest, right, in regular intervals which are agreed upon at the beginning. So let's say you want 6 months period, so they'll pay you interest every after 6 months for let's say a period of 10 years, right? So they'll keep on paying you your interest every after 6 months. And you find that at the end of the period that you invest with the corporation or you invest with the government, they will refund you your money just as it was in the beginning. So basically you get back a lump sum of the amount that you invested initially, except for the period that you lend them the money, they are giving you regular amounts of interest. I would advise somebody to go for bonds, because bonds is a secure way of investing, because especially if you invest with the government, it's so rare that the government will actually forfeit the debt. So it's a very good source of income. It's a very secure investment to make. So yeah, that's basically it about bonds. If you want to learn more about bonds, you know where to go, the investment pages. Basically, another type of asset that we can talk about is the granddad. On this one, I did not say much because I feel like almost everybody has got information about this kind of investment, and that is real estate. So real estate is basically investment in property, and you have income that is generated either through rental, so you have rental income, or basically through the property accumulating value over time, right? So real estate is a very stable investment to make for anybody, because it's very rare that anything will go wrong with land, right? It is a slow process, quite right as compared to shares and bonds, but it is a very stable investment to make because the risk is extremely low. So basically with real estate, right, you can either let's say get a property that you know is in an area that is likely to be a prime area later in time. So you can get the property, hold on to it until the property accumulates value, maybe let's say in a few years, and then sell it for a higher price. So that's an alternative in real estate. So another thing also is to maybe get land, construct houses, and then let them go in sales. And then another option also is to basically just get property and rent it out. So the property is in your name, so you basically have your investment sealed at the same price, and every after a few intervals or every after regular intervals you get a fixed amount of money. So that's a very stable source of income, and it is an area that I would advise anybody to invest in because your safety is guaranteed. So the next thing that I would like to talk about is mutual funds. So basically what mutual funds are is basically an investment vehicle which pulls money from investments. So pool, like P-O-O-L, pool is what I'm talking about. So it basically pulls the money from investors, and it pulls the money in from investors to create a portfolio of different assets. So basically you have the money collected from different investors, the money is put together, and then you invest it in a bunch of different assets to actually form a portfolio. So basically that's what a mutual fund is. And well, a mutual fund I feel like is a good opportunity because basically you have like diverse assets that are working in your favor, and yeah, it's easy for you to control, keep track of them, and stuff like that. So a mutual fund is definitely a go-to in the investment space. So that's basically it. The last but not the least is commodities, right? So we have different commodities. So commodities is basically goods. So you can invest in things like gold, things like oil, things like agricultural products. You mentioned it like different things. So basically you're investing in goods, and allowing these goods to either accumulate value over time or basically selling and reselling or anything like that. So that's a good investment to make, especially things like gold, which are like solid value. Things like oil that you know are always going to have like a good price. So basically you can find these kinds of commodities, you can trade with them on different platforms, which I will talk more about in a later video. But yeah, basically those are commodities, so you can basically invest in something that you can sell or resell, and that's it. So basically those are the types of assets, examples of assets that I can give. Another thing that I would like to touch on are what are the key components that you need to consider when making investments, right? So basically the first thing is what we already talked about, right? The type of asset that you're investing in. So basically you choose what you decide what you're going to invest in, right? So either you're going to stocks, you're going to go into bonds, you're going to go into commodities, you're going to go into real estate, you're going to go into mutual funds. Anything is okay, but you need to consider the kind of investment that you want to make, and also what kind of asset makes you feel fulfilled, what kind of assets do you have a little bit more information about, because definitely you don't want to make an investment in something you have zero idea about. That is a really bad idea, and I I think I learned that from the book The Richest Man in Babylon. Please read that book because it is a must read. And yeah, so basically you want to always have information about the kind of investment that you're going to make. You always want to be informed. You don't want to be ignorant about it because it's easy for you to be duped when you know nothing about it. So that's a bad idea. The first thing is obviously considering your assets. So the second thing that I will talk about also is the return. What is the return on the asset you're investing in? So how much are you getting back at the end of the day? So basically a return is basically the money that you get back after the period of investment is done. So if you're buying stocks or shares, how much are you getting back at the end of the day? Dividends either, or after you sell the share, those are basically returns. So yeah, so basically when you're making an investment, you want to consider the return. Like what kind of return are these assets bringing in, right? So are they having a good return? Which one has got a better return? And yeah, basically that's what you want to consider. So the third thing also, which goes hand in hand with the return, is basically the risk. So you find that different assets have very good return but have very high risk, which is most likely in the investment world. Usually I hear this saying, the higher the risk, the higher the return, and I can't beg to differ. Because usually you find that when something is very risky, how much you're actually going to make from it is going to be a lot. And I feel like that's to compensate, for the risk that you're putting in, basically opportunity cost, if you know what I mean. Basically you want to consider the risk. What is the risk that I'm putting into investing in this? So we have two different types of people. We have the risk averse and the risk loving. And usually you find that the risk loving people are either the people that end up to be the richest or end up being the poorest, because you need to be careful. You need to strike a balance. You need to take risk, but not too much risk to bring you down, if you know what I mean. So you need to be careful even as you're making investments. I would advise you to either see a risk analyst or a portfolio manager, basically to just help you analyze the risk in what you're investing and what's the probability that you're actually going to get back your money. So yeah, you want somebody to advise you on that. So see the risk, the return, the assets, and then the fourth thing that I'm going to talk about is the time horizon. So the time horizon is basically the time that you're going to hold on to the investment. So if you're investing in assets, how long are you going to hold on to those assets for them to actually produce the profit that you need them to produce? And apart from I'll talk about, like, for instance, land, right? If you're investing in land, how long do you need to hold on to this land for it to actually bring out the money that is supposed to bring in, right? So basically that's what the time horizon is about. So you need to consider the time horizon. You don't want an asset that you're holding on to for too long without it actually giving you any return at all. So that's also something you need to consider when you're making an investment. Another thing that I would like to talk about, which is the last but not the least, is diversification, right? You need to consider the diversification of your portfolio. So what is a portfolio? A portfolio is basically a composition of the assets that you're making an investment in. So you want to diversify your portfolio. You don't want to have assets that are all in the same space. For instance, if all your investments are in real estate and then there's an earthquake, what happens? You lose your money. All I'm saying is diversifying your portfolio is a better deal. So if you invest in stocks, let's say you want to invest 1,000 shares in a company, consider redirecting the money to bonds or redirecting it to something else, just in case the dynamics of the market change and you have the capacity to lose your money. Because you don't want to lose 100% of your money at the end of the day. You want something to still come back to you. So you want to diversify your portfolio. You don't want to have one asset on your portfolio, because when you have one asset in your portfolio, the risk is super high, and that is not something that you want to test. So basically diversification of your portfolio and all these other things I've mentioned. So basically consider the assets, the return, what is the return, the risk of the assets, the time horizon, and diversifying your portfolio. So that's it. That's all. Those are the basics of investment. I will definitely be doing more videos about investment. So please, if you like this kind of content, know how to manage money, anything self-development, please don't forget to like, comment, subscribe, share with somebody that you know needs to diversify their portfolio. And that's all I'm saying. Alright guys, that's pretty much it. That's what I had for you guys today. You all stay blessed.